Hello friends, this is CA Yogesh Panchakshari, MD, PPA Private Limited. This is a series of special videos which is exclusively prepared for CA Foundation students to get acquainted with and to be comfortable with the theoretical part, that is the conceptual part of the subject accounts. So let's start with chapter number 1 of accounts. That is all about the basic things of accounting which are required, which we should know ideally when we are going through these topics. So let's get started. What is accounting? The first question. It is an art of recording, classifying and summarizing in a significant manner in terms of money, transactions and events which are in part at least of a financial character. So what does it mean? We have seen this definition in 11th also. It means it is recording the transactions. We record the transaction, journalize them, then posting to ledger and trial balance and all that. Classifying the transactions as per its nature. So whatever its real, nominal, personal nature, getting its summary, that is trial balance and final account, analyzing it properly, and then making the interpretations, finding out something from that, like what is my GP ratio, what is my NP ratio, that is GP upon sales or NP upon sales into 100, and then communicating the interpretation to the management so that management can take proper decision. For example, if our GP ratio is increasing, management will be happy and will move forward. If it is decreasing, then management will find out the reason. So that is all about accounting. First short note. Second comes difference between accounting and bookkeeping. Basically, bookkeeping means just keeping the books. That means recording the transaction. And accounting is after recording, summarizing it, analyzing it in detail, and getting some conclusion. So bookkeeping is related with recording the transaction, while accounting is related with summarizing the transaction. It is related with base of accounting. It is treated as the base of accounting that creates a base, and this is language of business. So that what is language? Language is something which helps us to express ourselves. What exactly the position of the business, how much is profit, everything is expressed by accounting. Relation with financial statement, no relation. It is just preparation, recording the transaction. And here you prepare all the set of accounts like trading account, P&L account, and balance sheet. Connection with management decision, no direct connection. It is directly connected, as we discussed. If the GP ratio is increasing, good. Otherwise, we have to take the steps as decided by management. Are there any subfields of bookkeeping? No, bookkeeping is just an individual thing, keeping the books, that is recording the transaction. Here we have subfields like financial accounting, management accounting, cost accounting, which we are going to discuss in detail in the next few short notes. Then knowing financial position is not possible. It is just recording the transaction. Here it is definitely possible because we prepare a variety of statements like trading, P&L, balance sheet, cash flow, and all that. So when bookkeeping and accounting comes together, then it is called as accountancy. So accountancy includes both recording the transactions as well as analyzing the transactions and coming to some conclusions. So when both of them comes together, it is called as accountancy. Now the next short note comes objective behind accounting. Why do we go for accounting? What exactly accounting does? The accounting serves the following purpose: for recording the transactions systematically. Every business transaction is recorded properly to find out the result of organization, that is profit or loss from trading P&L account, to find the financial position of the business like assets and liabilities, that is balance sheet, to get the data for future decisions, and to confirm that business is solvent. What do you mean by solvent? Solvent means business is in good position, that is its assets are more than liabilities. It is having that much assets or that much value of asset which will be able to pay off the liabilities. So yes, the business is solvent. So for this, accounting is required. Now moving forward, the next short note is what are the functions of accounting? What does accounting exactly does? It helps the measurement of fact, that is profit or loss. It helps for forecasting or prediction, that means making prediction for future. Then it helps for taking future decisions. For example, product A is having good GP ratio, but product B is not having that much good. Then you will increase the production of A and reduce production of B for the next year. So future decision. It gives comparison with our past performance and also with that of others. So what is my NP ratio as compared to last year? What is my NP ratio and what is my competitor's NP ratio? Everything can be compared. It helps to calculate the taxes also properly. So these are the functions of accounting. Now the next question can be, what are different subfields of accounting? Subfields means accounting and its different spheres where the accounting data is used. First is financial accounting, that is preparation of trading account, P&L account, balance sheet, cash flow statement and all that. Management accounting is one step ahead of financial accounting. When the financial accounting gives data to you, you use it properly, and then it is to be used for further decision making and taking big decisions. That is management accounting. Cost accounting is out and out related with costing. So it uses the same data for cost control, that is controlling the cost reduction, that is reducing the overall cost, etc. Social responsibility accounting, what exactly organization does for the society, how much expenditure it has made, what is the indirect gain it has received, everything can be recorded. It's very difficult to record, but yes, it can be recorded. So that is social cost responsibility accounting. HR accounting, how much expenditure we have paid on our human resource, then what is the value of our human resource, how many which are the different methods or formulae we follow for wages, how much overtime payment is made, and all that is calculated here. So these are different subfields of accounting. That means all these fields need information from the accounts department. Next short note is, who are the users of accounting information? Who uses this information? For example, if I upload this video on YouTube, who will use it? Obviously, all the foundation level students all over India can use it, not the CA intermediate level. So who are the users of accounting information? Investors, because they have invested huge amount in your company. So whether it is working or not, what is their ROI, return on investment? Employees, they will understand how my company is going on, whether I will be getting some promotions or not. Can I count on this company for long run for job, or should I get shifted? Money lenders, they have given you the cash, so whether they will be able to get the interest from you or not, as well as repayment. Suppliers, they have supplied goods to you in past, and also they are ready to supply the goods in future also. So whether they should supply or not. Customers, they will pay you the amount and they will purchase your products, but whether the company is going to exist in future or not, because if company is not going to work in future, then what is the use of purchasing the product of that company? For example, if you purchased a car and that company went into in liquidation, company has been liquidated, that is sold out, and the operations are stopped, then from where will you get the spare part and service? Government is also interested so that it can charge some taxes on you. Public in a way is interested so that they can understand from customers point of view, from investors point of view, as a part of society also, what you are contributing to them. So these are different users for the accounting information. Now, next short note can come, relationship between accounting and other disciplines. So, for example, economics. There is no connection of accounting and economics. Yes, there is a connection, because the data analyzed by economics is taken from the accounting department or accounting data. For example, when we calculate GDP, gross domestic production, the data is given by accounting but used by economics. Statistics, of course, the data given by accounts department will be kept in stats department, and they will analyze it properly for taking further decisions. Mathematics, of course, yes, like ratio analysis are based on the accounting data. So yes, law is also supporting to accounting, because all the accounting terminologies, all the accounting processes are done as per the act only, plus accounting standard. Management, yes, management accounting is extremely important, because the data for management accounting is extremely important, because the data provided by accounts department itself is used by the management for taking the decisions. So these are different, different users, and sorry, these are different disciplines which are again depending on the accounting information. But of course, even though it is so famous, there are some limitations of accounting, like non-financial things are ignored. The profit of an organization is increasing, but how you are increasing that? Are you affecting the quality of the product? Is there any uh, impact on nature? Is there any air pollution happening or water pollution happening due to your production? Is not considered. If data is wrong, then accounting is useless. If the data itself is wrong, we call it as compensating error. If there are some errors, then it is of no use. Only accounting is not enough. It needs other disciplines also. Sole accounting will not solve your purpose. You need management accounting. You need cost accounting. Everything is required. Accounting standards, which we are going to see in the second video. Accounting standards are complex and changes in different countries. So accounting standards generally are assumed to be little complex, difficult, and again it changes from country to country. That is why now IFRS has been introduced, International Financial Reporting Standards, so that all the countries will have same accounting standard. Of course, it is in a way of implementation. There may be some conflict between accounting standard and laws. Yes, there are some conflicting areas in accounting standards and laws, but finally it is solved at the end of the year. Now, the next short note can be asked, what is the role of accountant in society? What does the accountant does? And what will be your role in the society in future? First is accounting to find out profit or loss. Internal audit, whether all the accounting by our organization is done or not. External audit, then chartered accountant gets these contracts to go as an auditor and check whether everything is correct or not, to find the frauds and errors, etc. Taxation, to calculate the tax and to help the client to save the tax in a legitimate, that is proper legal way. Consultancy, giving consultancy to our client on the basis of our expert knowledge, give the advice regarding uh, coming out of the losses, increasing the profit. If maybe the company is not is facing cash crunch, how to come out of it. All consultancy. Same, that is financial advice. Investigation, if there is any fraud or error, then we are invited as an investigator and we can find it out. Arbitration means solving the problem between two different entities. For example, A is a debtor and B is creditor, and there is a conflict between them. Maybe as a intermediary arbitrator, we can solve that. Costing, preparing the cost sheet and finding out appropriate selling price for the product, which will come at CA inter level. And other work like company formation, share related activities, liquidation, that is company to be closed down, solving the problem of public sector undertaking, etc. And preparing the budgets for government. All these roles can be played by you in future as a accountant in society. Next question, what are the essential features of good financial statement? When you prepare a financial statement like trading account, P&L account, balance sheet, what is the essential feature? Does it mean that the handwriting must be good, or if it is computerized, then the font size must be big? It is something more than that. What is that? First, understandability. It should be simple to understand. Anyone, any layman can pick that financial statement and he can analyze to some extent. Relevance. All the data included there must be relevant to the books of account or to the business. Irrelevant data should be avoided. Reliability. The data should be so accurate that the external parties or internal parties can rely on it, because ultimately you have to remember that on the basis of your data, the financial statement you prepare, huge amount of investment flows to your company. So it must be reliable. Materiality. Material means important. All the material that is important facts must be disclosed properly in the books of account. Comparability. It must be comparable. Your own performance must be compared with the earlier year, as well as your performance can be compared with that of others. Substance over form. It should be form, FRM. Substance means importance. Sometimes some things are there which are not given in format, but it is required to be disclosed, then disclose it properly. For example, loss by theft of rupees 30 only. You will say it's a minor amount. We can add it in general expense. Even though the amount is minor, but loss by theft is not a usual thing. It is something abnormal. So you should show it separately. Neutrality. You should be neutral. You should not be biased. For example, if you are an auditor of a company and the owner of the company is not in good books with you, doesn't mean that you are going to give negative report about him. You should be neutral, no partiality. Prudence, rationality. Whenever the financial statements are prepared, it should be rationally acceptable. Complete. It should give you complete information. If it is incomplete, it is of no use. Full and fair disclosure. Whatever information is available should be properly disclosed. Then only if all these 10 things, 10 guidelines, 10 features are followed, then it will be a good financial statement. So this was all about first 14 short notes, and this is our first video exclusively for foundation level, covering all the aspects of accounting. So you can definitely count on it. These are all based on your official study materials or study notes made available. So you can count on it. Go through this video and try writing some short notes on your own. And let's say 5 to 6 mark short note. Write it in point wise format. Don't write it in paragraphs. Otherwise, the paper checker will get bored. So write it in bullet point wise format and try it. And what is your opinion? Do you really like it? If it works, please click the button of like or write down your comment also. If you have any suggestions, you can very well send it to me. So this is just a first video. It's a series of video coming to you soon. So work hard, get very good knowledge. Obviously, it will help to score really very high. Good luck. Thank you.